Good afternoon, good afternoon. Hope you are doing good, and welcome to another video by the Market Maker SA. Hope you are doing good. I hope you are trading good. Before we get into it, don't forget to like, comment, subscribe, hit that notification bell icon in case so you get notified whenever we drop again. And without further ado, let us begin. So today we're gonna be looking at we're going to be doing a market preview. More specifically, we'll do a market preview on Eurousd, Gbpusd, and we'll look at the US30 today. So we're about to see what the market has in store for us, and well, from basically what happened from last week, how we can then attack the market, which approach are we going to take to the market this week. So without further ado, let us begin. We're gonna start with Eurousd. Eurousd has been moving very nicely. I like how it's been moving. It finally has corrected pattern. It has corrected the direction that we're looking for, based on our level count. Because as you can see, if us in the group were counting our level counts, and we were expecting a market to finally rise up from that market. Because as you can see, if we start to mark up our levels, we have our pick formation high right there on top. Very nice stuff. That was pick formation information. We had our level 1. Level 1 was quite short, that we don't count this as level 2, as it was in range of this high and this low, so it makes it consolidation. So we had level 1 into consolidation. We had, as you can see, the range ended somewhere there. So the moment the consolidation range ended, we had level 2. Level 2 probably ended at 2 there. Then we had our consolidation range. And then market finally gave us, after our consolidation range, gave us our level 3. That was very nice stuff. So obviously, me and the group were expecting upwards movement from here. We're expecting market to give us some form of peak formation low, an anchor point, an area of rest, so we can start to approach the market. And as you can see from last week, market did exactly that. Let me see, when was this? 13 Jan, so last week. Market did exactly that, giving us this very nice anchor formation right here, using this area as a place of rest, especially after taking out this area, using this area as a turtle soup or an inside out trade or a liquidity grab. Took out this liquidity that was here, making this a liquidity sweep, and this became our anchor point. Our anchor point became our peak formation low. And if we wanted to get hands on with it, more technical, we had a very nice head and shoulders there, as market gave us our shoulder, head, shoulder. So that was very beautiful, very nice stuff. And obviously, we had to attack it in some way. Now, obviously, catching it from down there would have been very tough. I'm not gonna lie, it would have been very tough, and it would have been very risky. It would have been very risky, as there wasn't really a lot to trade to actually risk our money to go into that trade. So we had to wait it out to take out some very key structures, and it did that right here very nicely. Taking out this structure, make this structure being taken out, confirming that it's a change of character and it's a lower higher low, higher high. At the same time, break of structure, indicating upwards movement, indicating a change of direction. All very nice stuff there. And then obviously, from that area going down, from that area to at least our point right here, that would have been our mitigation block. So inside our mitigation block, we'll then be looking for areas, or we'll then be looking for points of interest inside our mitigation block. And we found it right there in a base rally. Market coming back to that base area right there on that down candle order block. And we see the last candle before the momentum up was an opposite candle, and it's the opposite candle took out the went beyond the momentum candle. So that's very key there. The momentum candle didn't cover the opposite candle. It didn't do that, making it a down candle order block. So that's very nice stuff. I liked it a lot. And yeah, that was an area where me and the people traded very nicely. We traded, made our money, and we were out. We held it when we continued holding, even though it took out this structure. That's usually our take profit, but we continued holding. You can see that structure being taken out, makes that structure our high, but at the same time it makes it our mitigation block. And our mitigation block areas from the break of structure to the previous point of interest, as you see it's right there. So obviously once we've identified that, we knew, okay, we know that inside the mitigation block is where we're looking for a point of interest. And where was the only point of interest that we could see? As you can see right there, there was no down candle order block. And usually if there's no down candle order block, this is not an imbalance fill, it's a fair value gap. You can see market came to that fair value gap right there beautifully. Market came back to that area beautifully, and market went away quite nicely. It kind of took time for market to leave, but market eventually leave. As you can see, when market left, did very nice things. They came back to this down candle order block and continued the trend up. Which leaves us to today, because us in the group, we woke up this morning and we saw, okay, we have a point of interest that we can use as confluence to drive price up further this week. So what we had to do, we had to come into the market and just trade. Come into the market, look for a point of interest and trade. And the moment we entered it, let me just do there. Okay. The moment we entered the market, we immediately went to our H1. We went to our H1 to identify some form of point of interest, and right there we saw it right there beautifully, right there. Very nice stuff there. As you can see, market came to that area and ran away very nicely. And yeah, me and the gang were in it, and we are currently holding. As you see, went to that mitigation block, went into it straight. Obviously that would be our main point of interest, obviously, even though like the mitigation block was quite stretched out, but that will be our main point of interest. As you see, market ran away beautifully. So obviously for points of interest for our sniper entries, we use our ITC and SMCs to identify our points of interest and how we're gonna attack the market. But direction wise and how long we're gonna hold, we look at our BTMM. Now obviously in our BTMM, we identify that as a peak formation low. Our level count begins at the moment. I don't have moving averages, so, but it's fine, it's not a problem. And see right now, this was supposed to be our level 1, but then it came back and got violated, so this becomes our new level 1. As you can see, the level 1 is not really that complete as well, because we only had to go to your H1. That's the one thing as well. Another confluence that I saw that could be in our favor is that the level 1 is not even completed, it's just getting started. This was supposed to be our level 1 on our H1, but market came back and violated it, but it didn't violate it completely, so it counts as a level 1. So this then became our level 1. You can see there, very nice stuff. Let me just throw it out there. Change the I'm sure you guys can see the color. Yeah. Market gave us this level 1, very nice stuff. Went into consolidation, and the market came back to this fair value gap, but never mind about that. As on the H4, that was our down candle order block. So this became our level 1. Market went into consolidation and gave us this level 2. Now, this level 2 is not even completed, because if you go on your M15, what you identify is you only have that level 2 is not completed, because if you go on your M15, you only have 2 pushes. You only have 2 pushes so far. You see, currently we have push 1. These are supposed to be our push 2 and 3, but market came back and violated it, so we only have push 1. So we're expecting market to give us push 2 and push 3 at the end of the day, because our pushes are intraday. We count our pushes in a day. So obviously in a day we expect 3 pushes, and currently we only have 1. So that's why hence why me and the group are gonna hold on to it for long. We're already into it. We went into that trade about 6 o'clock, and we are holding currently. So yeah, very nice stuff. Okay, next let's go to the GBP. let's go to the GBP. Don't forget, guys, to like, comment, and subscribe. We could really use the support, as this year we're trying to expand the group even further in the YouTube and in all of our other platforms and what we do in our mentorships and everything else. So yeah, don't forget to like, comment, and subscribe. And obviously, if you guys want our full mentorship, mentorship program, the details of where you can contact me will be in the link down below. So be sure to go there and check it out. Okay, so we have GBP, and obviously we all know GBP and Eurousd. They move in simple correlation. They move in the same fraction of disparity. They move the same. So we're expecting the same stuff, but not necessarily. There are differences, but yeah. Okay, let's break it down. So we have our peak formation high right here. You see our information right there. First leg, second leg, and market has continued its down phase. You see right now we have our level one. After that level one, we got a big consolidation. Probably took like 3 weeks. As you can see, from October to November was just a whole week of consolidation. So that wasn't very nice for us people. But then market came back, gave us our level 2. Beautiful stuff. No violations happened. Gave us our reset pattern right there. And then market, obviously that was a whole consolidation phase. So that wasn't enough to make us jump because it was in the range of the consolidation. And then the market finally gave us our level 3 with no bumps and nothing. So that's our level 3. So obviously our level count has been completed, and now we are thinking what? We are thinking long. We're thinking long, and we're waiting for something to confirm our long. And as you can see, market did that very, very nicely. It's better than how it did it in Eurousd, honestly. That's something that I like very, very much. And as you can see, very, very nice what market did here. Gave us our first leg, came back, gave us our second leg, confirming our peak formation low, and confirming our W formation. And as you see what the market did right after that, W formation was very tough. Very, very tough what market did there. As you can see, we have our break of structure there. Break of structures there. And market finally broke structures right there as well. So we knew where market was going, but to be involved in all that mess was gonna be messed up. And it's way too risky. Now, this part is the part where it pisses me off. Pissed me off as market didn't respect price, and it's something that I didn't really like. As you can see right here, we had our mitigation block, points of interest from. We're looking for points of interest from our previous point of interest for our previous area to our break of structure, making that our mitigation block. So then after we've identified that, we expected market to come back to this area. And as you can see, we were a bit frustrated in the group as market didn't come back and respect that order block. Market came to it. Market didn't even come to it. Market used it and really came to that imbalance. I'm not even going to call it a fair value gap because it's a false fair value gap. Market came back to that imbalance and ran away off it. Something that I didn't like, and it's very, very unnatural and not something that we were willing to trade, and it was too risky. But then obviously market then took out this area, making that another break of structure. So we had to let that go and continue trading. As you can see, the only thing that we're looking for market to come back into that fair value gap, and run away. You can see market did that splendidly. You can see right there. Market did that splendidly. Market did that very, very nicely. Came back to that area. As you can see down there was no down candle order block, so it was very nice. That was the only area that we're looking to trade. Market came back into that area. Market ran away beautifully. There's another trade that we took. We took it here. At the moment, we took it here like last week, and we held it. I mean, our timing was kind of off because we traded it when it came into this fair value gap, when it came into this gap of that. So we were bidding red, but we held on, and market finally rised up, and we made our money. And as you can see, market market right now is kind of showing some promise of continuing the trend, but I don't like it. I don't like it, and I see market coming back to this area, using it as a order, as a demand zone. Reason being, to try and let me to try and buy from that area right there. It's a bit too expensive. As you can see, if you Fibonacci it, it doesn't come into our discount. It doesn't come into our premium zone, in our discount zone. So then it's invalid. And you see market right now, it's in a premium zone, and we only trade premium when we wanna sell. Right now, the market is kinda too expensive to buy. So we're hoping market will come into the 50, inside the 50. That's where I'm looking for this demand zone, come into the 50, into the discount zone. So that's where we can then buy price at a more affordable price, buy the market at a more affordable price. So right now, I ain't seeing it. I'm seeing market coming to it, but obviously right now it's in the up phase because of what? EURUSD. So it's something I won't touch, but also it's something I don't mind going up, because if it goes up, EURUSD goes up. But hence why I'm looking at market to come back in this area. We might have to cut our losses after today and reevaluate on how we're gonna attack the market. So yeah, but BTMM wise, very nice stuff. Not no mistakes. As you can see, this area was then violated. Was kind of violated. And right now we only have level 1 on the H1. We have level 1 on the H1. We have level 2 on the H1. So we're expecting one more level on the H1 to complete our entire level on the H4. So there might be a rise up. There might be a rise up today, completing the level 1. But we'll see. But right now we are not not in this trade. And yeah, it is what it is. We're not in this trade right now. And yeah. Okay, let's look at one more trade that we are in, which is USD CHF. Let's look at CHF, and then we'll look at the US30. Don't mind looking at that. So yeah, there's another trade that we're in currently, and as you can see, we are in it to sell. We are selling USD CHF, and right now I'd say we're in money, but yeah, we're in money. So as you can see, market gave us this peak formation high. Very nice stuff. Came into in the morning, saw this peak formation high, and I knew instantly, okay, it's time to eat. So I saw obviously this peak formation high. I knew instantly what I was about to do. As you can see, market gave me that peak formation high. Market didn't give me a proper movement away from the peak formation high. That gave me even more confidence that the level count hasn't begun. You can see a market came to that up candle order block there, using it as a base drop, but at the same time using that base here as an up candle order block. Market ran away. So I entered in the morning, and this whole thing had not begun. I entered in the morning, saw my break of structures. As you see, break of structure there, mitigation block from that area to that area. That's a mitigation block for us right there. So I was looking for my points of interest, and I didn't even look far, because I saw market from last week came into a fair value gap in my mitigation block, came into it, filled it, ran away. As you see, it's a value because there's no up candle order block right there on top, and I knew went to the morning, I was in this consolidation, this hadn't begun, and I sold right there. Very nice stuff. And yeah, currently we're in money. I like what I see, and we're in money right now. Very nice stuff. Market came into that area, first leg, second leg, reset pattern, and dropped. So right now, level wise, level 1 hasn't even been formed. So right now we're currently expecting to hold for 1, 2, 3. But I'm gonna look at my targets for somewhere here. Just fix it up there. Looking at my target for somewhere there. Then from there, I'm gonna see how we can approach this. So currently, when you have if you look on your H1 for the BTMMs, when you have 1 that wasn't violated, had a big consolidation on the H1. Then obviously on the H1 we have this 2 that is currently, that's my mitigation block there. I apologize. We have my 2 that's currently being formed. I'm expecting another 2 expecting a bit of a retracement up into that fair value gap, dropping down for 2 because it's gonna be violated. So I'm expecting for 2 drop, then a consolidation 3, and we'll see how we attack the market from there. But I like what I'm seeing right now. As I say, we're in profit, and yeah, couldn't be more happier. Okay, that was the dollar versus the Swiss franc. Let's look at the US30, Dow Jones 30, and with the Dow Jones, there's one of my members in the group who trades it, so I felt like, who trades it, and I gave him the task to specialize in it because I feel like it'll be something that will help us a lot. So far though, what we see here is quite a lot, from the Dow Jones. Because if we enlarge it, as you can see right now, we have a big formation high, structures that are broken, confirming as a big formation high, and confirming that we're moving down. So that's something we've confirmed. And as you can see already, what market dropped from that area, giving us level 1, and level 2, but more currently it's getting extremely violated. So we have to reevaluate how we're going to attack the market. And as you can see right now, we already have this gigantic fair value gap. Because obviously in that gigantic fair value gap inside, there's no down candle order block. That's very nice stuff. That down candle there is too small to be considered a down candle order block. So with this fair value gap right now, we have a break of structure right there. Very nice stuff. And then obviously, let me just fix it up nicely there. Okay, see if we scale it down even further, we have this right there, that mitigation block. Very nice stuff right there. Obviously mitigation from this phase area. So obviously from there we start looking for points of interest inside the mitigation block, and as you see we have it right there with using that fair value gap. That was a beautiful trade to take. That was Mona Lisa painted in action. That was beautiful stuff. That was art happening right in front of you. The market went down, then retraced it back, then continued the trend up. So currently, how I see this play out, I see it dropping. Market has already reached a point of interest where it feels like it wants to swing. You know what I'm saying? Because that's the area obviously that broke. That's the area that helped break the structure. It's a very valid area. And you see what market has done there. Very nicely. Market is about it's already dropping. Yeah. But I don't know. We'll see. See, it's dropping. It already has some external liquidity right there to be taken out. Very nice stuff. So yeah, might expect it to drop, but we'll see. You can see right here, a lot of traders were taken out. A lot of their monies were stuck in here. Man, I still believe they made money because I don't know. There's no trader who's dumb enough to continue holding. After that huge imbalance fill wasn't filled completely to the top. So they had to have left because obviously imbalance fills in the market have to be filled at some point. So if they continued holding and then they got taken out, that was dumb. So they could have made their money. So it wasn't a bad liquidity sweep because you had enough time to make as much money as you can and leave. So very nice stuff. As I say, I'm expecting US30 to drop. See right now it's already dropping. It's already taken out this structure. I like that very much. Obviously from there up, that's my mitigation block. Now points of interest wise, probably look for it to come to this fair value gap right here. I like this fair value gap very much. So I expect market to maybe drop a few more times. Drop a few, maybe 2-3 candles, then come into that fair value gap and rise away. Oh yeah. But if it doesn't do that, then I expect it to come back to this mini gap here, right there, this mini gap right there. And obviously that gap is then supported by this inverted fair value gap. The old fair, and obviously an inverted fair value gap is an old fair value gap that was failed to be respected and is then used to the opposite direction as a function or a mechanism for support. So that's very important there. And yeah, that's it. Thank you a lot for those who are watching. Thank you for watching the video. I hope that you've gained enough information and knowledge on this video. Don't forget to like, comment, and subscribe, and tell your friends about us. Tell your friends and your fellow um traders about us, and hopefully they can visit our channel and try to gain some knowledge. As I say, we'll have links below for the mentorship. So if you are interested in our mentorship, just hit the link below. Contact us. We'll put our contact details right there at the bottom of the in the description, and yeah, you'll contact us. So thank you all for watching, and hope you have a blessed day. Happy trading, and yeah, thank you. Goodbye.